Welcome to RANsquawk's EU morning briefing for Tuesday the 26th of May 2009. So European UK markets underway, just come up to around 8:30 now in London. Again, all the participants in the UK markets returning after the bank holiday yesterday, and normal service resumed in terms of volumes seen thus far. Major news this morning: bonds are higher and stocks lower around 1% in the FTSE CAC and DAX. At the moment, we have seen condemning across all the countries that North Korean nuclear tests we saw early yesterday, and furthermore in the last hour we have just seen North Korea fire a further 2 missiles, and AP News were also saying they could fire a third. That's getting a bit of attention at the moment. One of the major themes ongoing this morning, again, has been boosting the safe haven bids into the dollar, and again weaker stocks, higher fixed income, and as well with the stronger dollar, WTI crude futures have been on the downward trend, as well as spot gold prices. Other than that, another thing getting attention, which is helping underpin German bonds this morning, piece out of the Telegraph saying that German debt set to blow like a grenade. Their economics editor writing that Germany's finance regulator BaFin has warned that the toxic debts of the country's banks will blow up like a grenade unless they take advantage of the government's bad bank plans to prepare for the next phase of the crisis. Again, quite a lot of analysts have been looking at an article. Elsewhere, other things worth noting: a couple of ECB speakers, González Bramo saying the ECB is likely to begin purchasing covered bonds within weeks after its early June meeting, and hopes to exit non-conventional policies as soon as possible. And elsewhere, ECB's Weber saying ECB should not cut rates further, it says unemployment to peak in winter of 2010. In terms of other news, one thing looking further ahead into the week, we will see the OPEC meeting where they'll decide whether or not to cut production again. Latest hints coming out of Saudi Arabia, obviously one of, or the biggest producer of oil out of the OPEC nations. Saudi minister saying OPEC is not expected to change production policy this week, adding that world stocks are still too high to consider lifting output. Looking elsewhere, specifically for the UK markets, obviously returning today, gilt futures are trading higher at the moment. One key piece, or a few key pieces over the weekend. Robert Schiller, the professor from Yale University in the US, warns that Britain may suffer a double recession. He says there are a number of issues that threaten any long-term recovery for the economy: rising unemployment, mortgage defaults, and another wave of company failures could yet surprise on us. Elsewhere as well, Blanchflower, he's set to finish his term at the end of this week, to be overtaken by Miles in what's seen as his last speech as such. Blanchflower warning over premature rate increases. The BOE risks raising interest rates too early and bringing any future economy recovery to a halt, according to Blanchflower, saying it's too early to discuss exit strategies. Elsewhere, quick look in the equity markets. Aside from some of the theme, some risk-averse trade with stocks lower on this whole North Korean situation and stronger dollar. In terms of Asian trade, the Nikkei did fall 0.4%. Again, that Korean situation also drawing attention there in the Asian markets, and specifically for Danone, I like to look at in the CAC. They're seen down just over 5%. They did this morning say they're planning a €3 billion rights issue, and we can weigh on the stock price there. Again, at the moment, FTSE CAC and DAX down around 1% margin. So moving ahead to today's calendar, already we've seen German GDP, the Q1 finals, come out in line with expectations. The year-on-year number at -6.9%. And elsewhere, Swiss employment level did come out this morning. Didn't get much attention, did come out actually slightly better than expected. But leading on into the morning, main Eurozone figures now will be industrial new orders. That'll be at 10 o'clock London time. And then we'll see quite a raft of US data, starting with the S&P Case-Shiller at 2, followed by the main consumer confidence from the US at 3 o'clock London time, so that'll be 900 Chicago. Also, supply coming out, will be eyeing around €2 billion worth out of the Netherlands this morning. That should be due in around an hour's time. And then we'll have furthermore supply from the US, the first of their 3 issues this week. The 2-year note, $40 billion worth, usual time 6 o'clock this evening. And allied to that, we'll also have buybacks from both the Bank of England today for £3.5 billion worth. We'll also see a TIPS buyback as well, usual time at around 4 o'clock from the Fed.